Andrew Stafford, President of Prevail. I'm very excited to be here today with our newest voting member of our IAC, which is our Investment Advisory Committee. It's a 10-member committee, handles basically all of our portfolio management for our clients. It has a multitude of different individuals on it that have credentials from CMT, CFAs, and everything that you could imagine. But one of the reasons we are excited to bring Dylan on is his experience and his passion. One thing you can't measure and one thing you can't get a credential with, which is passion. Dylan, talk a little bit about your background in investing and how you got here.
Yeah, very excited to be here. It's been a blast to be part of the Investment Advisory Committee. Just my passion and my background has always been in valuing equities and value stocks, right? Being from Omaha, being around the Oracle of Omaha, right? Warren Buffett from Omaha.
And I know you love the old Berkshire Hathaway
days. You can't go wrong. You know, times have changed. Markets have shifted.
That's right.
Especially, you know, markets with Buffett now going all to cash. It's been very hard for him to manage with the transition to Able. But University of Nebraska Omaha provides a degree in investment sciences and portfolio management. So that's where my background's been in. And it's been something I've always been passionate about and just grateful to be a part of Prevail that provides a platform to be able to do that.
Well, you've been a huge addition to us. So let's pivot a little bit.
Okay.
So let's talk about markets. We came out of January and February. The S&P 500 was basically negative at that point in time. We had an incredible April, up 10+%.
Great.
And May starting to give it back. So inflation is creeping in. Talk a little bit about what you're seeing there.
Yeah, it's been a big headwind for the markets, right? It's all over the headlines, especially what's been driving that key inflation measure has been the price of oil.
Yeah.
Right. We've had price of oil historically been at $55 a barrel, right? Anywhere from 55 to 70. And now we're crossing the $100 threshold, right?
Yeah, 100, 110.
So it's been very difficult for businesses as they're continuing to expand in an industrial development, right? All the infrastructure happening in the United States, it's been expensive, right? And oil really has driven that inflation measure. And that only goes not only to businesses, but the consumers pay it at the pump.
So there's three things that we really look at, right? And so the interesting part about it, and I'm going to make sure I have these numbers exactly correct kind of as today, but energy, as you're mentioning, up 17.9% year over year, but gasoline is up almost 30% year over year. Yeah. Huge pain at the pump.
Yeah.
But what I think is moving markets is the derivative of the energy piece is what's happening in the bond market.
Yeah.
The 10-year and now the 30-year. So we're looking at the 30-year Treasury yield at 5.19, up 9. It's a 19-year high.
Yeah.
Right?
Yeah.
And it hit at that point.
Yeah.
And the 10-year Treasury, which is basically what the baseline to price risk assets are, is 4.69. It's basically the highest since January of 2025.
Yeah. When you're seeing that 10-year go up, going back to my education standpoint, right? The 10-year is that risk-free rate that we always looked at. So when the risk-free rate moves up, that causes the equity multiple to go up too, right?
It reprices all risk.
Reprices everything.
That's right.
Right? So you look at it from a completely different lens when you see that risk-free rate go up. But what's been abnormal is when we look historically in the markets over the last 5 years, we've had a not normal yield curve, right? Where the short term has been higher in rates and the long term has been lower, but now we're seeing some normalization of that. And we're having to reprice all assets.
So what I think is we kind of land the plane on this, number one, on what we're doing, but also I don't think that this is a fear moment for the market.
Right.
It's very interesting that we came off the S&P jumping 10+% last month. It's normal for some repricing to occur. So the underlying fundamentals in the market are good. And what I think the difference between being fearful right now and looking at this to say, okay, this is a moment in time, is we have an understanding of why this is happening, which is the Iran conflict, the closing of the Strait of Hormuz.
That's right.
20% of oil volume goes through the Strait of Hormuz, which is causing an oil shock. And now you're seeing that permeate through everything that's going on. So as we land the plane, we're going risk off a little bit, but we also see this as a buying opportunity over the next 30, 45 days.
Yeah, Andrew, I think it's so cool about Prevail is volatility is an opportunity. Not something to be fearful over, right?
That's right.
So we're always looking for opportunity of where can we redeploy cash.
Absolutely. If you'd like to learn more, check out PrevailIWS.com.